Welcome to After Hours Action on the Street. I'm Greg Greenberg in New York, and we've got yet more earnings on tap with reports from Chipotle and Google out just moments ago. We'll get to those numbers in a minute, but first, here's a quick look at the closing numbers. U.S. markets were mixed Thursday as investors digested another temporary solution to America's national debt debate. The S&P 500 finished up 11 points to a new record high. The Nasdaq was up 23, while the Dow fell 3 points. Weighing on the Dow were less than thrilling top-line results from IBM, which finished down 6%, and Goldman Sachs, which fell 2.5%. A slump in fixed income revenues, which dropped 44%, was the main drag over at Goldman. In commodities, the second largest gold miner, Newmont Mining, rose nearly 4.5% as precious metals gained. Gold was up $36 to $13.19 as the dollar weakened. Oil, meanwhile, fell $2 to $100 as worries about Q4 growth knocked down crude prices. Let's get to some after-hours action. Chipotle shares are trading higher to around $4.45 after the burrito chain missed street estimates by 12 cents, but beat on the top line by over $6 million. Same-store sales were up 6.2% in Q3, well above the 4.7% advance predicted by analysts. The stock has done surprisingly well, up almost 40% since October 2012, when David Einhorn singled it out as a good candidate to short. And Google shares are spiking in extended hours trading. The search giant is up 5% to $935 after trading down 1% during the day. Google earned $10.74 a share in its Q3, beating street estimates by 40 cents. The search giant also beat on the top line. To sum it up quickly, paid clicks were up, cost per click was down, traffic acquisition was up, and investors are pleased, at least for the time being. Outside of earnings, the big story in Wall Street today was the long-term impact of the government shutdown. Some economists say the loss of government services alone will take a $3.1 billion bite out of gross domestic product. In total, the cost of the shutdown could reach $24 billion when non-government spending is included. S&P economists estimate the economy will grow at 1.6% annually in the fourth quarter, as opposed to 2.2%, which they expected if the government had stayed open. One item worth noting, however, and it's an important one, the S&P rose over the course of the three-week shutdown, so perhaps traders' faith in Washington finally is coming to a deal. They were rewarded after all. And Stephen Tanda is here to talk more about the true state of the American and global economy following the government shutdown. He's a managing board director at Royal DSM, the $13 billion Dutch materials company. They do business around the world across a number of sectors. His stock's up 40% in the past year, so we're lucky to have him here to talk about the economy. Welcome, Stephen.
Good to be here, Greg.
All right, before we talk about the global economy and the shutdown, tell me a little bit more about Royal DSM. You're in sectors and products all over the world, but a lot of Americans don't even know about it.
Yeah, we are about a 13 billion company, active in nutrition, biotechnology, advanced material. And there's not a day that will go by without you being in touch with DSM, the vitamins in your cereal or in your supplements or the plastics in your phone.
That's good to know. You're all over the place. Now give me your view of the American economy as well as the global economy, since you are everywhere.
Actually, the US is our single largest market, and on a comparative basis, we're still bullish about the US. It's a source of innovation. We've done a lot of acquisitions here. Clearly, Europe is quite slow, and we don't see that getting any better. A lot of issues in Europe. Energy cost is very, very high. Innovation is slow. Labor markets are not very flexible. We see the emerging markets slowing down, but still a lot of growth compared to the rest of the world.
And let's talk about your business here in the U.S. You do a lot of life sciences business here in the U.S. You're making a lot of acquisitions. Tell me your plans for America.
Well, right now we're very busy integrating those acquisitions. We did about $4 billion worth of acquisition in the last couple of years. And once we're done with those integrations in about a year or so, we certainly will look for more.
And you're also big in ethanol. What's going on with regard to ethanol? There was an ethanol craze not too long ago. Those stocks really shot up. Tell me, what's DSM doing now? Is it the next generation of ethanol that you're concentrating on?
Exactly. We're really focused on the really advanced biotechnology to make cellulosic ethanol, meaning ethanol from waste, from corn stover, the waste that is being left on the field. We are investing in Project Liberty. That's about a 250 million ethanol plant in Emmitsburg, Iowa, together with Poet, that will come online early next year. And that second generation will really drive a second wave of ethanol growth and bring additional income to farmers.
I want to go back to Europe for a second, because you do a lot of coatings business over there. I guess it would be comparable to what we see here with regard to DuPont. I guess they're a big competitor of yours globally. But tell me, in terms of your European business, what you're supplying in terms of your materials. I want to know about building over there.
Yeah, clearly about half of our resins business is exposed to construction, coatings, and we haven't really seen any significant recovery.
Not even in Northern Europe?
Not even in Northern Europe. So it's really slow, will continue to be slow. The Dutch government just reintroduced the crisis tax. It was supposed to be one time. Now it's hitting us with $10 million in the bottom line this year because they're doing it again.
And then finally, put it all together, since the government shutdown is over here today, do you think it'll have a major impact on your planning, on your business going forward? Because right now we're seeing a lot of CEOs, they're lowering their guidance and they're saying, well, because of the US government shutdown, we're going to lower our fourth quarter numbers. Sometimes it's an excuse, sometimes it's not. What do you think?
Well, clearly we're impacted by the consumer being less confident. Food and beverage is really slow. The A brands having a tough time to get growth, particularly in the Western markets like the US and Europe. So it's impacting us there. Where we see still very good growth is actually in Asia, and things like infant nutrition, those keep powering on.
But if the U.S. sneezes, does the world, especially China, catch cold? Does that still hold true?
Not as much as it used to. China's growth is really shifting from an investment-led growth more to a domestic consumption that is continuing to holding up well. But clearly, coming back to Europe, companies that used to supply a lot of equipment to China, to the investment boom, those companies see less growth, and that's also impacting Europe.
It's that old decoupling story, right?
It's
coming
right.
back.
Yeah.
Thank you a lot, Stephen Tanda from Royal DSM. And thank you for watching After Hours Action right here at The Street. I'm Greg Greenberg.